Good afternoon, everybody, and welcome to the Traders Group. This is your host, Gary Himeski. It is Monday, March the 30th, a little after 4 p.m. Eastern Standard Time. Like always, I want to welcome everybody on board, new people as well as the existing members. Let's get right into it, get right through the disclaimer. This webinar is for educational purposes only. I'm not giving any kind of trading advice. I am not an investment advisor. Trading does involve risk, especially options. These webinars are designed to educate you and help you in your decision-making process. All right. Oh, I just realized that date was wrong. My apologies. Boy, what a weekend, huh? Everybody have a good Easter holiday? Hopefully. Or I guess what is the other celebration? Gosh, is Tom on board today? Not Cross, but the other Tom? He may not be. Anyways, he sent me a nice email, kind of an email card, wishing me a happy Thanksgiving. It was a good holiday. And the reason I'm talking about all this in regards to trading is that on Friday, the unemployment report came out, even though the market wasn't trading. And the market tanked 165 points in the futures. So we had 3 days to think about how ugly Monday could be. Did anybody make any trades last Thursday? Give me a yes, no, something. Any trades last Thursday before the long weekend? One of the things I've learned over time, actually Scott Macbeth taught me this, he taught me about the holidays and how to place certain either indexes, ETFs, or for that matter, generally the stock market in general. It usually gets very, very happy the day before as well as the day after a holiday. And light of what just happened, it seemed to bear true. Last Thursday wasn't a stellar day, but it was a day that the market did go up. So even though the unemployment came out and it was ugly news, which actually was good news because it means it's putting off Yellen and their decision-making process for raising rates, I don't think it's going to be happening in June or perhaps this September, maybe in the late fall. But in lieu of the fact that unemployment really shot up there and things aren't looking as rosy as what the Feds want it to be, and that I think is good news as far as not raising rates. Not good as far as indecision when they're going to do it, but it is in regards to the fact that more than likely there isn't going to be any rate increases coming into late fall. Tom, good for you. You traded Priceline. So did I. That was what I was going to talk about. I wanted to talk about Priceline only because I believe last Thursday, if you got my email, it talked about Priceline right there. Now, I did say the April 1200s because most everybody here is not a quick trader on a weeklies like I am. I like to have quick profits, turn around, and go on to the next one. So I'll tend to do a little bit closer to the money, and I usually do spreads on weeklies because it limits my risk. And so on Thursday, I came in and I bought the 160, 170. Bull call spread on Priceline, where if you look at what the price was last Thursday for the weekly, 160 was right at the money, which is what I always do. I'm sorry, the wrong one. Which is what I always do. I like to have some intrinsic value on the call that I'm buying for bull call spreads. So it's only 44 cents, but I was a little bit in the money. So I bought that, and I sold the 170s. I didn't pay $4.55. I paid $4.50. Oh, well. I was talking to one of our other members, as a matter of fact, doing a little bit of coaching and training on that Thursday, and he said, what are you looking at? What are you looking at? I said, well, I'm looking at Priceline, looking at doing the 160, 170 spread on that for next week. And he said, okay. So he jumped in on that as well. I don't know if he took his money off the table today or not. I did. Because those today, I bought 4 of these. Actually, I sold them for more than 1,300. Or I said more than 1,300. I just timed it a little bit better. Because if you look at what that would have been if you sold it and what this would have been if you bought it, $7.75. I actually sold it for $8. So anyways, a quick turnaround. Now, the reason I'm bringing all this up to you folks is I've shared this once and I'm going to share it again. It's a little index card that I have sitting right on the bottom of my monitor. It's Bulkowski's Best Days to Buy and Sell. The guy's a genius. He wrote the Encyclopedia on Candlesticks as well as a lot of other things. In a bull market, which we are in, the best day to buy is on a Friday. The best day to sell is on a Wednesday. Conversely, in a bear market, the best time to buy is on a Monday, and the best time to sell is on a Thursday. So in lieu of the fact that Friday was Good Friday and the market was closed, I came in on Thursday, and I think that you guys can see that's what I made, $1,400 in one day. So it was a good day for that, and I just wanted to bring that up again in regards to don't be afraid. A lot of people are scared because of the weekend. Oh my God, what's going to happen? Armageddon, Ukraine's going to blow up, Greece is going to blow up, China's going to blow up, something's going to happen, and then the market is going to collapse. No, you stick to your convictions and know that history does repeat itself. So with that in mind, let's get right to the macro picture. The Dow is on the left, the S&P is in the middle, and the NASDAQ is on the far right. I've got this set at 3-month daily. Can everybody see this okay, by the way? Everybody can see these charts okay? I don't know why this is got the settings for the rollover. I don't want to see those. Oops, this is 20-day. My apologies. Do 3-month and 3-month. Okay. All right, what I want to show you here is a simple little thing that I do. You guys can do this as well. It's not hard to do. You go to Drawings. You click on Fibonacci Retracement. It turns into a pen. Click on the low. You don't have to drag or hold it. Just click on it and move your mouse up to the high and click on it and let go. Now, I do have my settings set under the General for snap drawing to OHLC, open, high, low, close. So it automatically finds the high and the low. Okay? So if you look at this, something interesting happened, right? Right here. We bounced off that 50, didn't we? Right? That's exactly what we did. So you tried to pierce it once, didn't find any sellers. When you have long wicks like that, that means they're trying to find buyers or sellers depending on if it's on the downside or the upside. And they couldn't find any sellers down here, so it closed above the 50. Same thing the next day. Ran up, couldn't quite make it. Tried to break through it again, didn't do it. Now we've got a person's pivot study breaking out, and let's see what happens tomorrow, but here's where things could go to 1793. It busts above about 17,950. 17,950 on the Dow, then we're off to the races. The market's going to be bullish. If it doesn't, we may have another retracement a little bit. But from the Dow side, things are pretty strong. Same thing from the S&P. Again, we bounced off the bottom of linear regression. Not quite as strong with Fibonacci retracements on this, but we'll take a look. Well, once again, tried to pierce the 50% retracement twice, couldn't. Third time it's pulling up. And as you see, the DPO, this yellow line, never broke the Bollingers. And now it's crossing, it's above, can you see that number, 1.7814? It's above the zero. So it's pulling up. Only one that isn't is the NASDAQ. Weird thing as it is. So let's see what we can do here. Okay, so what did we have here? again at the 38.2 retracement. You see how that 49 also, if you guys don't use a 49 EMA, real powerful moving average on a daily chart, works very, very good. I've shared this many, many times. When the blue dotted line is above the red dotted line, the 49 EMA is above the 89, it's a bullish market, in a daily chart especially. So anyways, you can see what's happening in the market in a little bit bigger picture here. And we're still trending up, and it looks like the market wants to go up. Now I say that with a little caveat, and this is why. Let's do the Dow, asterisk DJI. It's only 10 years worth of history here. It's set at best rating of whole zone, 14 days. If I highlight this area, what does it tell me? This area here lights up. It's from the middle of April to the beginning of May. 10 out of 10 years the Dow goes up. And pretty significant points if you look at that. 104 the year before, 2013 almost 300, 250, 600, so forth and so on. If you go to best rating of coordinates, you take this little dip right here and you just highlight that. Now, let's see if I can find it. No. Best profit per trade, let's try that. There it is. It's not a real strong short at all, okay? In all reality, if I took it from the end of March and dragged it up into May, on the right, that'll change from short to long with a 90% probability. So there's just a little bit of hesitancy here for me in thinking, well, okay, market could retrace a little bit this week, especially when the market was up 177 points after being down on the futures 165 on Friday. Typically what we've seen here in a pattern the last 3 weeks is when you have this kind of a bullish day, there's either profit taking or the market pulls back. It is moving and progressing upwards, but it's doing it in this stair-step fashion. Now, one of the things I did is I did a bunch of research over the weekend on ETFs, and if you folks want, I will email this as part of an attachment to the regular Excel sheet. Everybody needs to have and know these 13 ETFs. They're the highest volume optionable ETFs in the market, and they represent a good spectrum of the entire market. For example, EEM. If I went into EEM to see what kind of volume and open interest it is, let's just look at this month. Folks, that's liquidity. That's huge, huge liquidity. Now remember, ETFs don't move like stocks, which in a way is good. They're not susceptible necessarily to the real volatility that individual securities have. So if you want, I can email this to everybody, and you guys can have this list as well. And when you do, then you can just run this list through Best Choice, through the seasonality cycle wizard. But if you do, you have to change the minimum rating to 1. Doesn't matter what the other settings are, but the rating has to be 1, because ETFs just don't move enough to create a 4 rating based on the mathematical formula that Pete had designed for the software. So I've done this on these. There's only 2 in April, the VIX and TZA, but they both start in the middle of the month, which if you think of what I just showed you on the Dow goes up about the middle of the month to the beginning of May, which means the VIX, the fear index, would go down. Okay, same as the TZA. It also goes down because it makes money going up when the market goes down. It goes down when the market goes up. It's kind of like Alice in Wonderland. So these are great ETFs. I mean, one of our members likes the TLT. And folks, this is not molasses stuff. I mean, these things do move. The Brazilian index. Anybody think about the Brazilian index? But wow, how about that? 13-1 from the end of March right into the beginning of April. Did it do it this year? Well, there it is, right there. If you guys can see that, there's that move. End of March, right into April. And this isn't a small move. It's from $30 to $33, $34. Again, ETFs, folks, you play out the money or slightly in the money. Very rarely do I go maybe a strike or two out of the money, but generally in the money unless I'm buying a little bit of time. But as you folks know, I like to be a shorter-term trader. So if you want, I can email those to you. You should also have all the State Street spiders, because this gives you all the sectors. So you'll know what sector moves when. Okay? So if you're interested in those, then I'll attach them to the Excel sheet. Okay. I went through and looked at all the earnings for the entire month of April. It's Earnings Central again, starting this week. I identified 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 that I'm interested in so far this week based on my analysis for all of the trades. I'll only talk about a few. You guys can look at the rest. One, of course, is the big boy that we all know, and it finally today decided to make a little bit of a move, and that's Apple. Apple has earnings coming out on the 27th. It's the end of the month, but it's a pretty strong 90%. Well, this says 90. I had 100% in here someplace. That's best profit. Let's go to best rating of whole zone. And there we have the 100%. 10 out of 10, 9.2% average move. If you go to the candlestick chart, let's go back to 6 months. Boy, I don't know if you guys can see that, but tomorrow that will be a bullish engulfing candle. Speaking about bullish engulfing, the SSO, which is an ETF for the S&P 500, SSO, if you take a look at that on a 3-month daily chart, boy, look at that. It's a huge, huge candle breaking out. 6-month, it's even more prevalent. When I did it on a 20-day hourly, it just went, wow, I saw this right here. I saw that candle. I mean, look at that, folks. That is bullish engulfing if I've ever seen one. Pretty much a doji, indecision. Bears fought the bulls. Who's going to win? It's the next day. Guess who won? So it's a real strong pull-up on the SSO. And if you look at the SSO on Best Choice, it has the same historical 8 out of 8 middle of the month, which again, this tracks the S&P. So now we know the Dow goes up. We know the S&P goes up. Let's put in the Qs, QQQ. And this tracks the NASDAQ, and you got a 90%. So folks, there you go. Historically, we know what's going to happen typically between the middle of April to the end. It may be off. It may start a little bit sooner. We'll see. Tomorrow will be the telltale if it will, because we had 2 bullish days. Let's see if the trend can continue. And that bullish day today happened after some very bad economical news from the government on Friday. Okay, so back to Apple. Nice looking chart. Bounced off of the, this green is not a 50. It's a 49 EMA. So you can see how price is bouncing off of that. The red is an 8 EMA. And it looks like it wants to cross the blue, which is the 21. As a matter of fact, it was just about pulled up. Tomorrow will be the telltale sign once again. So we'll see if tomorrow it pulls up. All right, if you look at this basic chart, and a lot of people were saying since Apple moved to the big boards, it just hasn't moved. It just stayed in this doggone trading range. A lot of people that bought the 130s, it just never hit there. Just never hit. 129.20. So, is there going to be a run-up now to earnings? Well, remember, historically, If you do, I think it's best rating a whole zone. Nope. Best profit per trade. It's a 90% short with a pretty strong rating. 2 earnings. Now, it doesn't necessarily mean it's going to do it this year, but historically that's where it is. So it may pull back before earnings. Okay, so be aware of that if you're thinking about taking a position, that there may be a pullback this week, especially in lieu of the fact the market may pull back. Again, tomorrow will be a telltale sign for all of this. Anyways, based on the historical average move of 9.2%, if you go to the charts and go to trade, and again, you're going to be looking for my expiration on all of this, and you take 9.2%. Well, first take the stock price of 127.35 times 1.092, giving us a target price of 139. Pretty high, isn't it? But look here, the IV plus on the right side, $10.80 plus 127 puts me at about a 137 IV target. What about if I did, what is the 1 month standard deviation is $11.37 plus the 127 puts me at 138. So all of them above 137, right? So when I was looking at pricing, I was looking at the market, even though it's up $2.03, I did this on Friday, I looked at the 130s because 130 is where there was resistance. So if it can pop up through the 130s, then we're off to the races. So that's what I looked at as a potential position with a 43 delta. A lot of people stretch the 135s. It's not me. I'm more of a conservative trader. All right, so that's Apple. A couple more of the earnings ones I want to go over. A couple of financials. Citigroup's coming out, and that's a 90% long, 8.75%. Kind of consolidating here. You can see there's almost a flag being formed right here. If I drew a trend line from here to here and from here to here, it's like it's being squeezed. Could pop. MAC is kind of curling over. But historically, we have a 8.75% pop around this time. Now, earnings for Citigroup are 16th before market. It says before market for C. Oh, that's what I got. Okay. So that's one you can take a look at. I won't go through the math on it. Well, it's a pretty cheap one the way I see it. Inexpensive, excuse me, not cheap. $1.04 for the 52.5. You got 28,000 open interest. You do have 19,233 in the short, but you know what, folks? You see how that lines right up with the 52.5? Here's a trick. Taught this to somebody else and they really liked it. Go to either the straddle or strangle. Since that's the same strike price, it would be a straddle, and see if that volume is sitting there. So you'll know what people are doing. Well, there it is, the 52.5. I'm sorry, was this a strangle? Yeah, I'm sorry, a strangle. Let's do a straddle. There it is, 19,322, 19,322. Oh, by the way, I dropped options hacker. I'm just not going to do it. I realized it's really not for us. The unusual volume thing. I'm going to be checking out something else, though, always trying to learn. So there you go. People are straddling this. A little bit of indecision. I'm going to try to make money both ways. Okay, so a little trick to see. That's where a majority of the volume is. If you're looking at this and going, oh, gee, here's 28,350 open interest. That's great. Wow, it's a lot. Then you look over here and go, oh, geez, there's a lot of people selling it too. And they're doing a straddle. is what they're doing. Okay, so that's a little trick to look at. Next, AXP is the next financial that's coming out. That's American Express. It's a nice 100%er, 10 out of 10. 8.9%, 8.95% average move. Don't like this downtrend. That's for sure. But let's take a look at what it looks like a little bit over more time. 1 year. Still kind of going down even in 1 year. How about 2? 2 is a different story. And kind of what do you see over here, folks? Can you see this right here? I don't know about you, but if I took a pen, let's see if they have pens here now. Options, screen. What other options do I have? They used to be able to give me a pen. Now I can't even see a pen. I'll have to take a look at things. Anyways, there's an M. Can you see it? It's blatant. It means it's potential it's going to take off. Looks like a double bottom being formed. You could probably see it better if I did it here. There it is. So AXP, I was looking at the May 82.50s, and they're now 91 cents. I had them as $1. Because you have a $4.50 here, that puts me at about a 84, 85 strike. Oh, here's Apple. This is what I'm going to show you on Apple. I'm sorry. Breakout on Apple after it bouncing off the 49. Can everybody see that? Consolidated. There's the 49. Hit it once. Hit it twice. Now it's pulling up. We've got a DPO that's broke the 0. And here's where the potentials are going. That's why I picked the 130s for Apple. It's at the 50% extension. The 135 puts me way up here, and it takes me beyond the 61.8. Doesn't mean that this stock can't bust right through any of those, but I'd like to play it more conservative, and that's one of the reasons I looked at the 130s on Apple. Back to American Express. Here is the fib retracements, and why I was looking at the 82 and a halves. It's right in between the 23.6 and 38.2 retracements. It's right below that 49 if it is going to pop. I mean, we have some positive things here, but not a breakout yet. But again, this is an earnings-related trade. It's an event that happens, and according to history, this event after the green dots pops up. You can also say, where is it sitting at right now? This year, way down here. So can you say it's following its composite now? We'll see. I'm checking something else out that if it works out, I'll bring it to the table for all of us, and has a lot to do with seasonality as well. Okay, so that's AXP. Illumina is also coming out, ILMN, with their earnings, and they're also 100% at 8.98%. Kind of consolidating down here. Trend is up. One of the things you can do just using best choice, and you guys kind of may have forgotten how to do this. I used to teach how to do this. It's a pretty cool feature that is in best choice. And it's just looking at linear regressions, and the sweet spot, if you're just looking strictly off of bar charts and linear regression, that's it, would be between the 50% and 90% of linear channel regression, linear regression channel. So in between the 50 and the 90, you could probably say right around between the 202 and the 205. So let's just say I don't know if this thing has a 202. Yeah, not a lot of volume, so you got to be careful. Look at the May 195s. Is it going up? No, it's going down 22 cents. Yeah, the 195s I think is what I put. I would wait for more volume and open interest to come in, but there's enough interest here, folks. So you can see that right here. That's at the 200. There could be people selling that thinking that 182 is never going to get there and they're just going to collect that premium. You also have some sellers over here at the 190s. That's for next week's expiration. After that, not a lot. You got 200 in the money here. May, nothing really. Second weekly, nothing. So April's kind of slim. There's 253 bought today, but that was right at the 180. So I looked at the 195s. So 195 would put it here. What if we go to the option chain? It didn't like when I did that. Okay, let's try this again. Alumina. Oh, come on. Well, let's do this. Format error 440. Could not probably receive data. Please try again in a few minutes. Okay. That was interesting. Well, see if I can do it later. Maybe I can do it on another stock. Let's take a look at DPS. That's another earnings trade coming out. Dr. Pepper, Snapple Group. Boy, I tell you, that thing just looks screaming up, doesn't it? And it is, 6 out of 6. It goes up. They're having earnings on the 23rd. It's towards the end of the month. They're sitting up here right now. A nice looking chart, linear regression pulling up. You can see that. Let's take a look at 2 years. Boy, just smoking up there, isn't it? And when you look at a 2-year chart and you overlay earnings on top of price, it's the relationship between the two, which is extremely important. And you look at price consistency and earnings consistency, anytime you see something over 90%, folks, that's really, really good. Really good. So back to, let's go to DPS, 6-month chart, sitting there right at 9.9, nicely oversold. Let's see if this works. No, it doesn't like me today. Okay. I don't know why it's not allowing me to. I hope I don't screw things up. Let's try it one more time. It's an important feature I want to show you guys. Okay, my apologies. I guess it just doesn't want to do it today. I'll show you it another time. It's how to determine your strike and is it giving you the biggest amount of profit based on targets. It's a neat feature. I had some problems with databases. I had to redo my whole database today, so I'm sure that has something to do with it. All right, so DPS, Apple, what other? Well, Disney again is coming out, and I think Disney's going to do well in their first quarter. They come out, and they're a 90% winner. They're coming out at the beginning of May. So, you know, keep that one in mind. Again, I listed everything that I saw coming up in April. Another one that's interesting is BHI that I looked at. And it's a 10 out of 10 with some pretty good percentages. Kind of sitting in the middle of its 6-month linear regression channels. 3 months, same kind of thing, a little bit below the 50%. Big pop up today, Baker Hughes. So I said, well, okay, so it's got a pretty strong historical. Maybe it needs to pull back, probably. Earnings are not coming out until the 21st of April. Here's what I saw as a problem, which immediately said not But then I looked and said, well, what's going on for April? Well, now I got a lot of interest. So this has to expire. The problem is the 20th is a Tuesday, and that Tuesday prior to the Friday prior to that is expiration. So these are all expiring on that Friday. Earnings are coming out the next Tuesday. And so I listed that. I said, no OI for May, big OI in April, which is what it is. July, there's more interest, but that's buying way too much time for me. Another earnings trade, SPR. Spirit Airlines, 8 out of 8. Goes up. Nice looking chart. Not a lot of intraday volatility because the bars are short, but a nice looking channel. Let's go to 2 years, see what earnings on price looks like. Well, they were losing money for quite a bit of time, but now suddenly they popped up in their earnings. So let's take a look at if there's only any open interest or volume for May. And there is, 1,127 for $1 at the 55s. One-month standard deviation is $4.75. If you add that to 52, that puts us at, what, about 57, 58? I think I chose the 55 strike. If you look at what is the IV plus or minus, $4.40. Again, that puts me at about real close to 57, 56. So 55 is realistic. Okay, one that I'm putting as a short. I know you guys don't like shorts. And this is not so much a best choice play as it is more of a technical play. It's on JP Morgan. Anybody, my audio connection, okay, is my audio back? It was lost. Okay, can you guys hear me? Somehow I lost a connection. Everybody hear me? Somebody please say yes. Ed, Henry, Robert. Anybody hear me? Hello, hello? Okay, thank you. JP Morgan, really great company, right? Sham broker, ripping everybody off, stealing. It says a 90% long historically. JP Morgan is coming out with their earnings next Tuesday before market on the 15th. Oh, I got the 15th. I guess I need to change that to the 14th. Excuse me. I have to change that. I did some technical analysis on JPM in lieu of the fact of all the lawsuits they've got going on right now. And I think this thing is going to tumble. So I went to 5 years. I'm not going to go through the mechanics of what I went through, but I'll show you what I did. I looked at every single year on their first quarter over the last 5 years. Every single quarter, in their first quarter, they tumble. They tumble on an average of 11.23%, and the average time frame takes about 4 weeks. So I think a conservative target price for this conservative would be about $58.40, right around here at the 50%. Probably if you look at $3.81, subtract that from 60, that puts me at 57 or below. I think this thing has the potential to get all the way down to 55, right down here, in between the 61 and 68. So I listed that as a short. The other one I listed as a short is a company called FT&T. Fortinet. Never heard of them, but it came up on the radar. Yeah, it was a 5 out of 5 short with a pretty good 9.49% move. So I said, well, is there any open interest on this? There's decent open interest. What did I do? The 32s. One of the things I looked at is that right there, 8,000. Somebody came in pretty strong. And that's kind of why I listed it. I mean, that gave me the confidence to say, okay, somebody came in strong, and I don't know when they bought this. I guess it'd be an easy way to find out. Let's go to a think back on FT&T. Let's open up May, and let's see when that actually comes in by clicking back. Well, so there's 1,300 bought on that day. 6,700 is still there. Okay, there's 2,000 that came in. So 1,300, 2,000, those are some players because they're paying some money. That's pure premium. I mean, 2,000 times $3 for crying out loud is, 300 times 2,000 is what is that? 60,000 plus dollars. So there's some, there it is, there it is, there it is. Somebody came in 4,754 options on March the 23rd. And this is end-of-day pricing. Who knows what they got it for, but assuming the stock doesn't move very much at $34.72, probably paid close to $250. So somebody dropped $200,000-$300,000 in their belief that the stock is going to be going down. So in lieu of that, and in lieu of the fact that Best Choice says it goes down, 5 out of 5 years, and if you look at where is it sitting at currently at a scale from 0 to 100, it's sitting way up towards the top at about 85% of its historical price movement. Now, a lot of things are lined up to short this thing. So I looked at the May 32s on this. Now it's 80 cents. What did I put? 85. So it's gone down a little bit. Change it to 80. And if you look at the standard deviation for 1 month, you take that percentage based on Best Choice and subtract it to get a target. That puts Best Choice target at $31. Okay, there we go. So Best Choice is as close to the low of its 1-year linear regression channel. Standard deviation puts it at $30.76. And the IV plus target, which is 3 things that help confirm what a target price is. And then I wish this other feature was working. You know what? Let me shut down Best Choice and open it up. Maybe it'll work again. It's probably going to pop that same error. Has something to do. Oh, hello. Good, 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 good. Okay. So we're looking at May, and we're saying if I picked the, I don't know why this doesn't show 32s. FT&T, not the right one. FT&T, it's not showing it. Okay, now maybe it's behind a little. Oh yeah, see, I'm looking at April 2nd for some reason. Let me hit my puzzle piece. April 2nd. Okay, well, that's the last Thursday data. That's right, because it's been a long weekend. I actually want to do this on Apple. Okay, good, it's working. This is using the option chain that Best Choice developed, not the one if you connect with Thinkorswim and you have a Thinkorswim account. So if we go to the May expiration, which is the third one down, say, okay, I was looking at the 130s, remember? For $3.70, which is still at a $125 stock. That's still at 3%. So if you click Show Targets, and it asks you to put in a stock price, you just put something in below the last close. So I'll put in 125. Then it says, give me a target price of where I think this stock will go to. Well, remember we looked at Apple at 136, 137, 139 in that area. So why don't we say, I don't know, let's say 136. Goes all the way up to 136 as our target. What happens is this column turns to profit. And you can actually see that, and again, it's based on delta. It's based on the Greeks today. This does change, but at least it gives you a semblance of an idea to help say which strike price is going to give me the highest return and highest potential based on time to expiration and delta. So the best is the 125 at 77%. The 130s is a 62.16. So let's go back to Show Targets and say, okay, what if it goes to the 139 level? What's the best? And there's the 130. So has to get above 136 to really make that 130 profitable. But it's a neat tool, folks, that helps you decide and look at which option is going to give you the biggest bang for the buck. Pretty neat, huh? That's built into the software. So I wanted to show you that as another tool to help confirm. Besides the three tools that can be used here, which is the IV Plus. If you don't have this script, I'll be glad to email it to you. It's really easy to load. You just copy and paste what I email. You copy what I email to you. You go to Studies, Edit Studies, go all the way to the bottom left, click New. You'll highlight this and then right-click and paste whatever you got, right, or what you copied, and then name that study. I would do it the IV rank study is what I call it. And then click OK, and then you'll always have it, and it'll appear in your studies. I have it as a IV rank plus, I believe is what I have. Yeah, IV rank levels right there. So it's really helpful because it gives you the standard deviation of 1 week, 1 month, daily if you're playing a daily thing. It tells you what the implied volatility is, but it also tells you the rank, which is really important. That's different than the IV. The rank looks back over the last 252 days and says at a scale from 0 to 100, at what percentage is that stock currently at in its volatility? And if it's low, it's going to be yellow. I mean, real low, it's going to be red. A little bit higher is yellow, and then let's find a stock that's, well, for example, Priceline. Priceline's low, real low. Oh, and this is what I saw in Priceline. Remember I told you guys last week? It hit and filled that gap, 130, and there it did. And I said, these things off to the races. I had all the triggers right there on that day. So I said, it's off to the races, and it sure is. It tweaked and went above the 191. Little resistance there. This thing is going to bust on and just keep on going. That's the strength of Priceline right now. Because even when the market was not doing well, Priceline, once it makes up its mind, it moves. Seasonal long. Let's see what I got. Car. Avis. 90%er. I looked at the May 60s on this. Really nicely oversold, sitting at 7.1. What did it do today? Looks like it may go down. 90% probability. Probably tip down here at this level here as a low of 56. This one was a low of 56. Boy, 2 days in a row of this almost exact same low. As a matter of fact, it was 2 days in a row right there. So if it hits that 56, you can see up here where it says low, it hits that $56 and bounces off of it, then you know it's time to get off to the races. What's it look like on my charting? Yeah, not ready. Not ready. What about a 20-day hourly? I like to use that. Yeah, not ready. It's still in a downturn. It needs to pull up strong. Yeah, with a 3-month, it looks the same. Anybody here use the Ichimoku Cloud? Ichimoku Cloud. Anybody? Yes? No? No? Interesting, because it gives you a different perspective. Anyways, wait for CAR to come back. Let's put it that way. I'll show you that in a second. One of our members wants me to go over. Look at that, 29,253 sitting at the 65, and that is not what I looked at. I looked at the 60 for $1.10. Conservative, but my delta is got to be over 20. I'm not going to stretch this far. Bob, are you talking about best choices earnings thing? Is that what you're talking about? Let's take a look at that. I'll put in CAR. Excuse me. And let's say I'm choosing the 60s. Is what I put down. So you'll click the option chain. You'll go to your expiry month. Looking at May. You'll go to the top here on the right that says Show Targets. Window pops open. Input some number, doesn't matter what it is, that's underneath the last close. 57.44 is the last close. I'll just put in 57. It doesn't matter. It's just saying what would be your stop if you made this trade in the stock. It's as if you're buying the stock. And then click OK. The next window that pops up, oops, should be less than the current price. I thought it was less than the current price. What did I put? Oh. It is less, you son of a idiot. There, put 56. It didn't like my 57. Then you put your target. And that's, again, using the historical percentage move you expect the stock to go as one tool to find your target. The second tool would be your IV plus based on your expiry month. This is $5. 5 plus 56 puts me at 61, 62. Your third, if you have it, is this 1 month standard deviation, which is $5.40. Again, $5.40 plus this puts me about 61, 62 bucks. So I have 3 things now that have confirmed besides the best choice, which if I did the historical percentage move, puts me at a target of $61.59. So let's just say $61. Click OK. This column turns to profit. The 60 based on that's the $61 target price based on today's current call price for a May expiration 60 strike doesn't look good. It says your best option is to do at the money of 57.5 for $2. That's if your target is 61. Okay? So, I mean, there's lots of things that could happen. Let's see. This is saying a 44% move. Oh, that was one of the problems I had with this thing. 44%, guys, is out there, right? Because of this right here, 80% move in 09. So I tried to find something that was less aggressive. This is still 49%. In other words, it's skewing these things, but that's a little bit more realistic, 14.44 rather than 44%, right? So maybe I can even do a little bit less in there. I don't know if I could find it. There's a 60%er. I want to find that same win percentage. Oh, there it is, 13.65. That's probably the lowest I'm going to be able to get. And it does have 2012 at 26%, so that kind of gives me a little bit more confidence. So I can go ahead and include that anomaly year and say 13%. Well, if you go to this current stock price of $56 times 13% or 1.13, sorry, my girl is getting mad at her brother. He's leaning on her. Puts me at a target of 63. Okay? Now, that's today. That's today. Once this thing gets down here to linear regression, or if it stops right here, and interesting, if you take a price line and I snap it from here to here, you'll see something interesting. At 55, well, let's do a little bit different. Let's remove that and put it a little bit higher. 56.01, there. You can see that's where there was some resistance here that, actually, I'm sorry, support here, and it ran up. Again, support here, ran up. Let's see if this is support, because this is an inverted hammer right here. And generally that means that the, it could be a morning star too, but that generally looks like an inverted hammer to me. Okay, so you need to wait on cars, the whole point I'm making. REGN, expensive stock. Regeneron, great company. 10 out of 10, 12% move, folks, real strong. Historically, it moves well. Sitting kind of in the middle on a downtrend right now. This would be a May. So probably will bounce. These two will act as support, the 49 and the 89. Again, the 49 green line is above the 89 purple line, but I do have a turn down max, so I probably want to see what happens here. I think it's going to go down a little bit further to this area here around the 423. And then I'd be looking at perhaps taking a long position in this. I'd be looking for a May expiration. Oops, I typed in May. Long day. Expensive options, folks. And if you were going to be, I was looking at the 485s based on all the mathematics with a 24 delta. It's only 159 though. Again, not a real liquid stock here, but it will get more liquid. But that's a nice strong seasonal. The last one I think I have is PVH, Phillips Van Heusen, 90%er. Don't like that chart. No. Half cyan, bullish engulfing. I do have an 8 cross to 21 along with a MAC. So, and this is definitely a bullish engulfing right there. You can see it with the candlestick patterns built in, the best choice. So you can say, well, what's 2 years look like? Did it do the same kind of thing in 14? Yeah, it did, right around here, folks. See that? That's right. You can see the date right here. It's towards the end of March, right? And then it pulled up. Well, it actually pulled down here for the month of April, then pulled up. But here you see again the same thing, the end of, matter of fact, I think this was slated for the end, wasn't it? Yeah, this is towards the end. That's right, this is towards the end. I listed it though, just as a seasonal long, so you can be prepared for it. Again, this is towards the middle, towards the end of the month. So right now, it probably needs to run up and pulled back because it's had a real strong run from $93 all the way to $110. There's going to be some profit taking. If it breaks $111.70 thereabouts, that's the last high, could be off to the races. If it doesn't, it's going to pull back from there. But it is a seasonal strong long that you can look for to make some money in buying a May expiration. Last two, these are to do with ETFs. I'm going to start trying to do that every session. Again, middle of the month, towards the end, 100%er. Good consistency, 3.29. Again, these puppies don't move very well. They're pretty slow. I was looking at the May 45 on this. And that would be at the money for $1.11. Like I say, I usually play at the money for these things. And I want a pretty strong delta, especially if I don't expect a strong, a very big move. I have a target price on XLU of $46. So, if it can move from where it's at, 45.17, a little past 46, I'm making 50 cents on the dollar, so I'm making about a 50% return thereabouts. Okay, and again, you could do the same thing with XLU on this to see what kind of profit it would be. Didn't like it. I guess it just doesn't like me. XLY is the other one. And I have a video article embedded in the Excel sheet. It's very short. You can watch it. It's the consumer discretionary. It's a 90%er. I put down May as an expiration. However, something interesting happened here, and that is, somebody came in June and bought 50,000 options. And I think they bought them, there it is, on April 1st, 51,000 options. They paid 34 cents. But if you take 50,000 times $34, that's $1.7 million of pure premium somebody is banking on that the consumer discretionary will go up into June. So there's a little video about that. You can watch that. But I thought that was pretty interesting. But I said, I'm not going to wait till June because I see historically here's the good move. Because then what happens? Well, it has a short probability, higher percentage. Again, not a lot up or down, but a propensity more to go down than it is up into June. And why should I pay that extra premium when it's potentially going to go down and erode some of my profit when I could potentially make more money here where I have a higher probability of it going up? So I'll play out the money and maybe make 50% of my money. Last one, this is a short, it's QID. Now again, this makes money going up if the market goes down. Got to think Alice in Wonderland. So if this goes down, that means the market is going up. So it's an inverse. But it's an 8 out of 8 with a 7% move. And QID is a very actively traded ETF. If you look at May, well, there it is. Active enough, let's put it that way. It's not like some of these others, but there's enough activity to create liquidity. I would never go large in an ETF. There's just not enough movement and enough time. So I looked at the May 35s. Is that what I looked at? Oops, I'm sorry. That's right here. May 35s is what I looked at for 66 cents. Yeah, in other words, if I bought that, 64 cents. And I expect the move to get down to 34 on BCS, 33 for IV target, and 33 for 1 month standard deviation. If you say, well, come on, work, 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 work. Good. Okay, so I'm going to go to May. I'm picking the 35s. Volume is 106, 62 open interest. So I'll put something underneath here. Let's put 35. Oops, I'm sorry, above this. Let's cancel this and go to puts. That's what we got to do. We got to show puts. That's what I did wrong. So 80 cents. That's, again, this is not current. It's not showing current pricing because we know it was about 64 cents. Now I can show targets. Put something above this. Let's say 39 because this is a short. And my target, like I say, about $33.50. Let's do 33.5. And so therefore, the 35, if you can see that I chose, is an 87%. The actual highest profit would be the 36. So go a little bit closer to the money. Pay $1.28. And that makes sense. That makes a lot of sense for ETFs. You know, I mean, ETFs are things that I generally would pay, you know, play at the money or one strike out. So I'm changing this on the Excel sheet to reflect my more conservative look on this thing for $1.12. Okay, I know I've run over here, but does anybody have any questions or stocks you would like me to go over? Netflix. Okay. What does EW say about Netflix, Sandy? EW, by the way, is Elliott Wave. Okay, Netflix has, it looks like it has earnings coming out. Let's take a look at when. It's coming out on the 15th, aftermarket. I think there was a reason why I didn't list this. Yeah, looks good. I agree moving forward, but what about short term? I mean, does EW say anything about short term? I agree with you definitely on longer term. Well, here's the extensions and a breakout, if this helps a little bit. We do have a cross of the 49 of the 89. I do have a breakout of the MOBO and the DPO pulling up. Hasn't crossed the zero mark yet. We do have a PPS breakout today, but again, we had the market up 117. And the futures are right now in the ES, they're still positive. They haven't pulled back. So let's see what happens after 6:30. Let's look at what Best Choice has, though, right here. I'm going to hit the puzzle piece and make sure I got accurate data. All right. This area here from earnings down is an 80% historical probability short with pretty significant moves over the last 4 years. And where it's sitting at right now at 2015, kind of following that composite, ran way up, kind of pulls down. This area here may be a short, little pullback here. No, it's a long. Yeah, it's all long. So it's a long up in 2 earnings, 80%, and then a 90% probability as a short. I'm sorry, 80% probability after earnings. So run up 2 earnings, 80% long. After earnings, 80% short with a 4.2 rating. $32 move last year, 10, 28, 15, pretty strong there. And I've got an IV, see it's turned green. Whatever turns green, that means volatility is up there. It's above the 50 percentile. So this is a pretty strong downward trend on a daily. Let's take a look at a 20-day. Yeah, so that's not a, it looks like it's running up, running down, I'm getting lower highs, right? And this is definitely a resistance area here. You can see that if I snapped a price level right here at 422, you see that's where it was also some resistance. And that's right at the 49, and that's what's happening today, 3 dojis in a row. So if tomorrow pulls back and the NASDAQ likes to take away some of the profit, like typically happens, you know, we've had this great up days and then horrible down days, great up days, horrible down days. That's the way the market's been going. This is a little to the biased of being short. If it can break that 422 and get above 430, 428, like 429, it'll do a MOBO breakout. So then we'll have a PPS, a MOBO, a hull, and a DPO, and it'll probably start pulling up that 49. So, you know, we have a little bit left to go down to the linear regression, the bottom of the channel. Doesn't seem like there's any, well, gosh, it looks like, I don't know if there's people selling there. This could be a lot of people selling, just collecting premium way down here at 400. They don't think it's going to go down. So that's Netflix, seasonally speaking. 80% short to earnings, 80% long to earnings, 80% short after earnings. So, well, we got a bullish engulfing there, folks, which makes sense. It's 80% probability it's going to run up to earnings. So one of the things, folks, this has not done, and sometimes it never does, is fill the gap like Priceline did. Priceline did the same thing, but it came down and filled the gap, and then it's on its way up. This thing tanked hard here, right? Finally, it filled the gap here by beating earnings, came back up. So whether this fills the gap or not is a question, and this is a strong stock. You were pulling away anything on hog? What do you mean on that? Talk to me some more, Tom. 71% probability hog goes up. That's too many years. Let's see if I can get that more. 80% probability hog goes up. Middle of the month to the end. I've never liked hog. I've never traded hog. I like to stick to ones that my prime 11, Apple, Amazon, Baidu, CMG, Google, ISRIG, MasterCard, Netflix, Priceline, Tesla, and Visa. These are my prime suspects that I play. I play the weeklies on these and I make money. And part of the reason is they're very volatile. And there's a lot of liquidity in it. So hog, I've just, I don't know. And I don't know how excited other people are. They may be, though. I may be wrong. Well, there you go. It's kind of all over. They got 8,000 volume today. Wow. Maybe you just found something there, Tom. Maybe you just found something. Hog is, let's see, but that's after expiration Friday. It's coming out before market on Tuesday. So you have to make a decision by the 20th. Expiration Friday for April is the 17th. So maybe somebody's looking for a big run-up. That's probably what they're doing, and they're going to take their money off the table before they have to. Yeah, they're looking for, they see a breakout right here. From a shorter-term perspective, well, you know, I wouldn't even use 3 months. I'm going to use 20 days. No, I don't think I will. I think I'll use 3 months. $63 is the 61, $62 is the 50. This is picking the 62.50s, which is between the 50 and the 61. That's right between the 49 and here, and it's below the linear regression channel, top of it at 63. Got a mixed bag, Tom. 7 strong buy, 7 hold. So from an analyst perspective, it's a mixed bag. And from a seasonal perspective, it's like you see this big turn up, but now it popped strong last year. You can see that. The year before, there's, I guess, one way to take a look at this, and we can see if I can go through this pretty quick. All right, so we're looking for first quarter, which is right here. So all I do is highlight that. I take a look at that and say, oh yeah, big pop last year, real big pop. Good, that I like to see. So 2014 was a big pop. 2013 was pretty good because, again, these are coming out before market. So if you got in before that on this day or this day, especially down here at 51, it went as high as 55. So I have to kind of play close to the money on that year. But bottom line is after earnings, it went up. Year before that, nice pop right there. And year before that, went down. So I got 4 to 5. 4 to 5 years that thing pops, which kind of, I guess, agrees with the fact that this is an 80%er from a seasonal. I mean, you can get stuff for cheap, I guess. That's one of the things maybe, obviously you can't do April because earnings are coming out before, so you'd have to be looking at the 62.50s. Yeah, it's still between the 50 and the 60 right here. I would have to do a little bit more research, Tom, before I would say, yeah, looks like a decent earnings play. I mean, I got 4 to 5 years it takes a pop. I got an 80% seasonal probability. I've got decent volume and open interest, definitely on the call side, but I also have a lot of short interest too, which concerns me. And that 5,000 is not probably, it could be a lot of people doing a bull put spread. I mean, they could be doing bull puts on this thing, Sell that, buy that. I'm sorry, that's a bear spread. No, that's a bear spread. The other one is a bull put. So, an $1.13 credit, but I don't know why people would play so close to the money doing that. Most of the time people don't. They go further out to make sure they get all the credit, especially when you're buying that much time. So that, and I don't think this is a strangle or a straddle. Well, yeah, there's a lot of, there it is at the 60 and 62.5. There's a lot of people playing straddles on that. Straddles and strangles. So that tells me there's a little bit of indecision of which way this thing is going to go. Okay, any other stocks you guys want me to go through? Somebody put in there. IBB is a good short for EWT, and Tesla is a good for a long. Okay, so EWT EWT is Elliott Wave, and one of our members is a student of that. So Tesla, which had a huge breakout, I was going to play that today. I just was not concentrating. I was concentrating on some other things. But Tesla was a huge breakout today. Right there, hit that 89, got a MACD crossed over. Seasonally, Tesla is a 4-to-4 long starting in the middle of the month. I don't think we have a short, but oh yeah, we do have a short. That was one of the concerns I have. So it may have triggered early. It may have triggered early. IBB is one of the Investors Business Daily. Also has this as a breakout. So IBB is a good short. There's not much I can determine from this. Oh, wait a sec. Yeah, well, 50-50. 50-50. Yeah, it's 50-50 according to seasonality, so you can't really use that. You'd have to use more technical analysis. This definitely looks kind of ugly. A lot of short interest, no doubt about it, for April, as well as May. So for you folks, IBB, International Business Daily, Investors Business Daily, excuse me, as well as Elliott Wave. IBB is a short, which is the biotech, and Tesla is good for a long, and it may have broken out today. All right, folks, I've run over. It is nearly 5:30. Thank you, everybody, for attending. I wish you good trading, and until next week, we'll talk to you soon.